Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates and check out the market this morning. And then we will do a deep dive into manufactured homes. Great topic here for today. Something that a lot of people may get misconstrued a little bit. There's a lot of ins and outs to it. So, definitely important that we all know all those details about manufactured home loans. Yes, we can do them, but not all of them, and they are definitely a little bit trickier than a regular loan. So we'll get into that here in just a moment. Go ahead and drop comments there in the chat as you tune in. We appreciate it. We're just waiting to go live on all the different platforms here, and then we will get started. You can also drop any questions that you have in the chat as we go through our deep dive topic here for today as well. All right, looks like we're live on all the different platforms, so we'll go ahead and get it started. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and what we do every morning on this show is go through some live mortgage rates so we can check out the market and see what it's doing that day, and then we do a deep dive into a different loan topic. Today's topic is going to be manufactured home loans. So our sales manager, Jose, with 28 years of experience as both a loan officer and a realtor, has dealt with manufactured homes on both sides of the transaction, and so he'll do a deep dive with us today into manufactured homes. So with that being said, Jose, let's go ahead and pull up the rates first and see what everything is looking like this morning.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Good morning to our Mortgage Calculator teammates out there as well. Thank you for joining us for today's podcast, which is also pretty good product training. It's always good also to stay abreast of the pulse of the market. Today, we had some positive movement in the 10-year Treasury. The consumer information on the price index showed a little bit of easing on inflation. So hopefully the Fed will come through and start some interest rate cutting, right? That's the consensus out there. So we saw some good movement in the 10-year. So let's get into our rates this morning. So conventional, 80% LTV, 760 credit, 40% DTI, primary home. Where are we at today? We had it ticked up a little bit. Looks like the market yet hasn't reacted to the 10-year Treasury and the positive news that we had this morning. So it did tick up a little bit from where we were at yesterday. We were at 6.625, but I believe yesterday we were at either 0.75 or 0.875. One of those two, and not really any other options to speak of. That is our best option there on our conforming agency loan. So our next option here will be FHA, another owner occupied option. We do not quote, VA or USDA in this portion, but we do deep dives into it on occasion because.
Hey, Jose,
Yes, sir.
sorry to interrupt. When it comes to the pricing, so there was better news today. Does the pricing change throughout the days? Are we maybe going to see cheaper pricing later?
We may, pricing desks open up about 10 o'clock in the morning. So their secondary may still be digesting the information. So, yes, Kyle, that's a great question. We definitely do have intraday price changes. So I'm sure we're going to have some of that going on today. Be on the lookout. That'll be a positive intraday price change. The other day, we had a negative intraday price change in the middle of the day. They had some, reactions, and sometimes it'll change the cost an eighth of a point, a quarter of a point, sometimes even more if it's a real drastic change. So yeah, definitely everyone should be on the lookout. Or what may happen is some of the lock desks may choose to delay the release of their data until they sort everything out after the dust settles. So yeah, definitely, this is where we are this morning. But I assume we are going to have some intraday changes to the positive. So on our FHA loan here, all right, let's same parameters there. Let's see where we're at today compared to yesterday. Yeah, FHA is about the same. We were at 6% yesterday. I can't remember if we were 0.75 or 0.875, but it was more or less around there. All right. So now let go to our investment properties. So investment properties, let's go first with conforming, and conforming will always be full doc, so there is no choice there, right? 80% LTV, everything else the same. This is my favorite part because now we get to compare agency investment, which is always full doc, to all of our non QM investment options, starting with full doc, bank statement, and then DSCR. So here we are looking at 7.5 costing 2.75 looks to be the option to go with because, or here we go, 7.625 at 1.875. Those seem to be the two best options because we cannot usually go 3.875 points in cost on an agency loan unless you're getting some serious seller paid credits. Even 2.75 is going to be a little tough. And the 1.875 would probably be doable. Again, that's all depending on the compliance test when you run those. So that's our investment conventional, right? So now let's make it a little bit more interesting here. So we're going to do our expanded guidelines, and we have investment, right? And let's, okay, 760 credit score. Let me just check something out here a minute. My prepayment penalty is not auto populating, so I'm assuming the system is going to put a 3-year prepayment penalty on this property, on this loan. 7.5 and 7.6, and 8.125 costing 0.875. So we have some pretty good options here. Full doc, but now let's make it even more interesting. Okay. We're getting, let's try to reset this because I'm not getting my parameters here for, here we go. Let's change this over here. That was the issue. Now we'll go with bank statement, 12 months, and change this into investment, self-employed, purchase, and let's get this one 80% LTV. All right, let's see the rates today. So 7.75 costing 2.25 was very close. And look at that, 8.125 costing 1 point. So we have some very good bank statement options for our self-employed borrower. And now let's look for our DSCR options. And we'll set this for 1.5 DSCR. And actually, I always like checking that 85% option first. 15% down, which is possible for our 1-unit properties. 0, because there is never any mortgage insurance on non-QM loans. And let's check out the rates today. All right. Now, these rates, again, today could be a little skewed because I think we may be having a little technical difficulty where we're not able to add the 3-year prepay to the pricing here on our investment non-QM loans. So these rates are a little bit higher than they should be. Let me see if there's anything I can add here. No, that's what we're going to be able to do today. Let's go to 80% on this one. And let's show the rates again. And 7.625 costing 0.775 is our best option. 80% LTV, 20% down for our DSCR loans. So let's jump into manufactured housing. Okay, so first let's get into what exactly is a manufactured home, because there is a lot of misconceptions out there, and it happens all the time. I'll receive an email, oh, I have a customer that is looking to get financing on a mobile home. Okay, that's the first problem. A mobile home is not a manufactured home, right? A mobile home is a home that does not have any land associated with it. Let's just say it's a manufactured home before it became an actual home, right? A mobile home still has a vehicle title, right? A DMV, Division of Motor Vehicle Title. It hasn't been permanently affixed to land yet. It doesn't have a property folio number. It doesn't have any land associated with it. Maybe it never will. Maybe it's a mobile home in a trailer park where the borrower owns the mobile home but is renting the space, right? So in essence, any financing available for that would be like a what they call a chattel loan, CHATTEL, chattel loan. So you're going to finance that mobile home, but you're not going to finance that mobile home with residential financing that is reserved for homes that have land associated with them, or or a condo, for example, doesn't have land associated with it, but it's a different type of ownership. It's a condo. So mobile home doesn't have any land. Manufactured home is the mobile home that already transitioned to being a home. It's permanently affixed. You have an affidavit of a fixture stating when it was permanently affixed to the land, and all that kind of good stuff. Recorded document. That's a manufactured home. So mobile home, we don't offer residential financing for. Manufactured home, we do. Now, keep in mind also, there's going to be restrictions on manufactured homes on the age of the home, right? I believe it's 1976 or younger, right? Because I believe prior to 76, we did not have the HUD identification decals, so there's no way to track the manufactured home accurately. So that's one of the things you got to worry about on manufactured homes. Is each manufactured home is usually brought to the site in two pieces, two sides, left and a right side. It's put together on site, affixed to the ground via its foundation, and each side has a metal plate in the corner that has a serial number, and that all that information is recorded in a database. So if you ever have to if that decal, you can't find it because it has to be photographed by the appraiser. This is one of the super important things on these manufactured home loans. Then you have to order a HUD decal verification letter from a company called IBTS. You go to their website, ibts.org, and you put in the serial number of the manufactured home and you order it, and within a couple of days you're going to have your verification letter that verifies that that serial number was for such and such model, built on such and such date, and that's how you verify that manufactured home conforms to all of the HUD requirements for that it needs in order to qualify for financing as a manufactured home. Don't have those decals, You're not going to get the financing if you can't also get a verification letter. So that's really important. Manufactured homes, super popular. They usually have a really high rent compared to their costs. So usually the DSCR, the debt service coverage ratio, is going to be high because debt service coverage ratio is calculated by dividing the gross monthly rent by the total housing expense, principal, interest, taxes, insurance, and if applicable, association fee. So that when you have a number over 1.0, that means that the rent is more than covering the housing expense. Manufactured homes, that number tends to be nice and high, which is why the investors love it. And also, the homes tend to be more affordable, which is why some first-time home buyers also love it because a lot of times, especially with the craziness in the prices and inventory, it may be their only opportunity to get that first home, build some equity, sell it, and then be able to put that equity down on the next one that they're purchasing, and start the wealth creating process that is so awesome with owning a home. So let's get into the examples. I have quite a few examples for you today here on manufactured homes purchases in all different types, agency, non-agency loans. So waiting for the first option to come up here. Okay. All right. So here's our first option. Our first option is for a first time home buyer buying with 3% down, 97% LTV. So this is for our true first time home buyer program, buying through a program called MH, or stands for Manufactured Home Advantage. Now, this particular program is for conventional homes, conventional loans only, and does restrict the age of the home. I think the last time I did one of these, the home had to be 1991 or newer in order to qualify for MH Advantage. That's the main restriction. And then they assume those homes are going to be in better shape, and hence they give preferred financing. So breaking it down here on our 3% down true first time home buyer program using manufactured home advantage, you're looking at 7.125, almost at par, and you can buy that down to 6.25%. So now our next option is a Freddie Mac program called Home One. Again, this is also 3% down, and same pricing, just that they also give us a par option at 7.5, but you see here 7.125 is almost at par, just like the other one. Buying it down to 6.125, and let me compare to this one. Yeah, so the Home One had a little bit better pricing here, right? About an eighth of a point difference in pricing. And that's a Freddie Mac product, Home One. Now we have an affordable option. What is the affordable option for manufactured home advantage means? That means that this is a 3% down program. It's either home ready or home possible. Those are the Fannie and Freddie affordable home options. That means that the borrower's income has to be at 80% or lower than the area median income for that census tract. That's quite a mouthful, right? However, if the census tract is a low to moderate income census tract, or the census tract is a minority census tract, then the income limitations are removed, and then any borrower with any income can invest and buy their home in that sector. So here you're looking at 7.125 with a little bit of a lender credit. So it does have a little bit better pricing at the upper end, but then as you bring it down, you buy it down, the pricing does get pretty similar to the one we were just looking at. But again, that's a affordable option. Oh, and another option, another benefit of the affordable option, besides the rate a little lower, the mortgage insurance is like $60 lower as well. So now we have a regular conventional 5% down. Doesn't have to be a first time home buyer, doesn't have to be an affordable option. This is just 5% down manufactured home. So again, you see rate goes up a little bit by about a quarter of a percent to 7.375 with a little bit of an under credit. And you can buy that down to 6.375 at roughly the same cost as the other ones. Now, FHA is great for manufactured homes because with FHA, there is not a loan level price adjustment to finance a manufactured home. What that means is you're going to get the same exact rate on an FHA loan, whether it's a manufactured home or whether it's a regular stick built or site built home, like they call it. So in this case, you see much better rates, right, than the conventional options that do have a loan level price adjustment for a manufactured home. So here you're at 6.625 with a little bit of a lender credit. And check that out, 5.625, lowest rate option. So now USDA, right, as you can see, agency is really the way to go in your manufactured home loan, right? So, and you see USDA is very good for manufactured home loans as well, just like FHA. So you're at 6.875 at par, which is great. And 5.625 lowest rate option. And remember, 100% LTV for this manufactured home loan on USDA, always. Now, VA, right? We love our service members and our retired military or vets. So 7.25 is lowest cost option, and you can buy that down to 5.99. So, definitely USDA and FHA are better than VA, but still, VA is a good option. Remember, VA never any mortgage insurance. There is a funding fee on VA loans unless your veteran or active military has a service related disability of at least 10%, in which case they do not have to pay a funding fee. They are exempt. So this is our VA option. And now for our last two options is blowing your mind here time, right? DSCR. Let's go right to the meat of the matter here, right? DSCR manufactured home. That's like the unicorn, right? But at the Mortgage Calculator, we do love offering solutions to our investor. Let's not call them problems, but we like helping them meet their objectives, right? And in this case, a manufactured home DSCR purchase maximum LTV though is 70%, so it is a 30% down option, but it is possible. That's the key. It is possible. And look at that. You have a lender credit here at 9.625. You have lender credits, and actually the par rate is roughly between 9.125 and 9.25, depending which way you look at it. Those are almost both par, I guess, $88 cost. And you can buy that down on your DSCR. Remember, this is a DSCR loan on a manufactured home. It's an impossibility, but it does exist. 7.375, which is very amazing. So that home is going to be cash flowing like crazy. That's what they call those cash cows. And last but not least, want to show you another investment manufactured home option using bank statements, right? So the rate on this one gets a little better. Look at that. Our par rate here is 8.75, whereas our par rate here was roughly 9.125. So we got 8.75 at par, and you can buy that down all the way to 7.125 on our manufactured home investment property bank statement option. That's quite a mouthful, but we can do it at the mortgage calculator. Bank statement, DSCR, on your manufactured home loan. So I'm sure we piqued the interest of a lot of our investors out there, and you know where to reach us, themortgagecalculator.com.
All right, great. So I did want to just mention that I think typically as a to the loan officers out there, when you're speaking to a client, usually the easiest way to cut through, because that's the biggest challenge first, right, is to figure out if this is a manufactured home or is it a mobile home, is it a excuse me, is it a RV, is it a mobile home, is it a manufactured home? I think the easiest way for the loan officers out there is the first step is do they own the land or are they renting it, right, Jose? That's going to be right off the bat. The first, okay, well, if they don't own the land and then it's not a manufactured home, there's nothing we can do, right? We lend on property, on real property, not on some kind of trailer that's parked on somebody else's property, right?
Absolutely. We need to ascertain, is it a manufactured home or is it a mobile home? And yeah, I mean, obviously, if they have a property address, they could provide you the property address. You could go a minute and do a quick search on public records and see if it shows up. Would be really easy. That takes about 2 minutes if you know the website to go to, and we have all those tools in our knowledge center at the mortgage calculator. But definitely, yeah, got to ascertain what we're dealing with. And then another point is it a double wide or is it a single wide? Because that's another restriction. Many of the conduits will only lend on these products on a double wide manufactured home and not a single wide. So definitely got to look into the guidelines to make sure that that restriction is not present. Because the overall, let's say USDA, VA, FHA guidelines state one thing, but a lot of times there are overlays, right? And that's the key here to note. Some will accept a single home, and some will only accept the double wide on the FHA, for example.
All right. So the only question we have here is not really about this, but we can put it up anyways. Can we do a walkthrough at some point of a tri credit report? We've done that before on an internal training, and that would be a okay one for you to maybe jot down, Jose, for a future. That'd be on one of our Tuesday or Wednesday night loan officer trainings. We could do
Yeah, we
credit training.
we did that, but we'll revisit it. We did do how to analyze the credit report to view all of the different components to be ready. Because as we all know, the credit report is a lot more than just the three credit scores.
Let's see here. There's another question that came in. Should the location of the manufactured home be the first consideration, and could we provide financing for both land and home in one loan?
Okay, interesting question. I don't think they realized what they were asking in the second part, but I'm gonna try to figure out what they were asking. Well, I guess what they mean, should the location of the manufactured home be the first consideration, is I guess just accentuating what you were just mentioning, Kyle, that we have to determine if it's actually a mobile home at a trailer park that's paying lot rental, and then they just own the box that sits on the land that's being rented. That's a mobile home. That's not a manufactured home. Or is it a home actually sitting on land where it's permanently affixed to that land? It has a folio number, and it's a piece of property. And if you look it up in the public records, it'll say manufactured home as the type of structure, but then it's also going to have a folio number. It's going to have the information on the land, the description, lot and block, how big the lot is, all that kind of stuff. And now part two of the question is, can we provide financing for both land and home in one loan? So I think that would be more like, can we do a construction loan for a manufactured home where the borrower is like in a one, let's call this a one-time close loan, which is what they call those, which allows you to buy the land and also construct the manufactured home, which constructing the manufactured home basically means ordering it from the factory, right? It comes in two pieces. They transport it from the factory to the site. They put it together and they permanently affix it to the ground. That's what and that's what the construction portion, that plus when it was being built in the factory, the two pieces. So yes, there are one-time close loans for manufactured homes that you can do exactly this: buy the land, buy the manufactured home, and pay to have it put permanently onto the land.
All right. And then, last question. Do we have flyers for manufactured home programs? I don't believe we have specific flyers for them, but our different lenders and partners do. A lot of the times they'll have white label ones, so you could reach out to some of them for sure. A lot of them have different flyers and stuff, but I don't believe we have any directly focused on manufactured homes. Do we, Jose? I'm not.
No, I mean, probably not. We'd have to look to see in all of our ads that we have, because we have quite a few on there, to see in our Canva account what kind of flyers we have. But definitely, a lot of our partners do offer, like you mentioned, Kyle, white label options, and a lot of them do love manufactured homes. So if any of our team out there needs some guidance, just shoot us an email or something, and we'll tell you exactly which of the account executives you can reach out to. That would probably be the most helpful on this matter.
All right, great. Well, I think that is it. We'll go ahead and wrap it up. Remember, we do this 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we will be back tomorrow with a new topic. I appreciate everybody tuning in. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator.